Well, now U.S. markets hitting a record highs this year, but it's still underperforming the emerging market index by a lot. And according to Oppenheimer, around the world, we've got the largest percentage of stock indices at all-time highs in 26 years. Some of those indices are the Nikkei, Korea's Kospi, the Stock 600, Germany DAX, Brazil's Bovespa, and Egypt's EGX 30. So should you diversify outside the U.S. going into the new year, or is it too late? Let's bring in Alastair Pinder, HSBC Head of Emerging Markets and Global Equity Strategist. Alastair, it was a long period of not much going on for international markets investors, all about like domestic. We have people saying that. But if you were in some of these indices already, you're having a great year, not sweating the volatility so much. But are these things now moving in lockstep with the U.S.? I'm looking at Korea. You've got SK Hynix, Samsung sort of getting into this AI stuff. Can you use that to diversify your portfolio, or is this sort of a global enthusiasm?
Well, I think you touched, really the key issue on the head here, which is, at least for emerging markets, I would say the big thesis to go into this area is that it essentially is an AI play, but at a huge discount, and doesn't have the same kind of ownership and the crowding like you see in some of these AI stocks in the US. So this is particularly Asia. So you could think about China, Korea, as you mentioned, Taiwan. Essentially, to me, this is AI stocks at a cheap discount. And guess what? They haven't done all of this capex, like the Mag 7. So we're not even that worried about the return on investment when it comes to the AI story. So I think that's a great theme in EM. And of course, the other big thing that's been really supportive this year for international equity markets is the dollar. The dollar has been strengthening a little bit, but I think fundamentally the dollar is still going to weaken going into next year. And that, to me, again, supports the case for emerging market equities and even going into areas like Europe as well.
Well, we at CNBC, the on-air folks, can't invest in individual stocks. So I've tended to look through a lot of mutual funds and indices and say, okay, what's really in these things? And a lot of them, it's a lot of utilities, banks, not necessarily the stuff that would benefit hugely from AI. So where should investors particularly look when they're thinking about that AI theme that you're talking about connected to some of these international indices?
So if you take EM, here's a great stat for you. What we call new economy sectors, which is things like tech, semis, EVs, that only used to account for 15% of the EM index. Now it's nearly 40. So actually what you've seen in EM is a complete shift. And it's EM Asia in particular, which fits that theme. In Europe, Germany, to me, stands out as the clear winner of some of the international, kind of rotation. Again, because they're doing this heavy infrastructure spending, which is going into next year. I just don't think that's priced. Actually, if you look at flows out of Germany, they've been coming out. You look at valuations, they've derated a little bit. I think you've got a lot of growth upside going into Germany next year.
You just touched on exactly where I was going, and that is if you look at some of the best performing markets this year, it's also the markets where you've seen some sort of stimulus, whether it's monetary or whether it's fiscal. Case in point, Mexico, they just cut rates again today.
Totally. So, I've mentioned a lot when EM Asia, the story for EMEA and LATAM, as you mentioned, Mexico and Brazil, is that they've got interest rates which are extremely elevated, above 7% in Mexico, 15% in Brazil, around 10% bond yields in South Africa. They have the room to get cut, and that should support valuations. That, for me, is a really important story, again, not properly priced, and that drives a valuation re-rating. Might not be the most exciting earnings story, but it's this valuation re-rating in LATAM and EMEA, which I think is going to be key going into next year.
Are trade policies and tariffs factoring into some of these global market moves that we're seeing, or are we seeing these bull markets take root despite that?
I think, so weirdly, I think tariffs have been a good thing for international markets because you talk about this stimulus. Why has China done stimulus? Why has Germany done stimulus? It's actually to offset the tariffs here. And now what we're seeing is that the tariff uncertainty is starting to come down. Actually, a lot of the concerns that we had about tariffs impacting, exports, maybe it's not as big as what we once thought. And then we get in trade deals. I mean, Trump's just been on his tour of Asia. We've got a bunch of trade deals. You talk about Mexico, we could get a USMCA deal next year. All of these things, again, very positive catalysts for these international markets.